Hello friends, now let us start discussing the last P of our levy where we are going to focus on person, where our focus will be on person. You are talking about the sixth P. Friends, the first three P's, product, process and place. Product being goods, services, process being supply and place being intrastate or interstate supply that we have discussed in a chapter called as levy of GST. The next P, fourth P, price was all about your valuation. The fifth P, percentage was all about classification, and we are discussing the last sixth P of your levy where we are going to discuss about person, where the person is taxable person. The person is taxable person. Friends, the section here that will be concerned with are only three sections which actually belongs to your levy itself, section 9.3, 9.4 and section 9.5. In levy we have discussed about section 9.1, the base charging section, and section 9.2 which said that for the 5 notified petroleum products, GST Council will notify a date, right? Rather, government on recommendation of GST Council will tell a date. From that date those 5 notified products will come in. Now friends, our focus is entirely on section 9.3 RCM type 1, section 9.4 RCM type 2 and section 9.5 eco. So if you want to talk about section 9.3, you can roughly call it as the first type of RCM, reverse charge mechanism. Section 9.4 you can talk about the second type of RCM, reverse charge mechanism, and 9.5 you can talk that electronic commerce operator will pay. 9.3 and 9.4 are the cases where they tell that recipient will pay GST instead of supplier. So RCM, reverse charge mechanism, I think we have discussed a lot of times. Reverse charge mechanism means supplier will not pay GST to the government, it is recipient who will pay GST to the government. And there are two types of reverse charge mechanism. Type 1 reverse charge mechanism is section 9.3 and type 2 reverse charge mechanism is section 9.4. Section 9.5 talks about a scenario where neither the supplier will pay GST to the government nor the recipient will pay GST to the government. It is electronic commerce operator who will pay GST to the government. And if at all you want to know the corresponding provisions in your IGST Act. So section 9.3 in IGST Act is section 5.3 of IGST Act. 9.4 of CGST Act is similar to 5.4 of IGST Act, and 9.5 of CGST Act is reproduced in section 5.5 of your IGST Act. 5.5 of your IGST Act. So 9.3, 9.4, 9.5 is of your CGST Act, and we have, as we have already discussed, that the charging section in IGST Act is section 5, right? Now the corresponding provision of section 9.3, 9.4, 9.5 RCM type 1, RCM type 2 and eco in your IGST Act is section 5.3, 5.4, 5.5. Rather, there is no difference except for the word. In CGST Act, section 9 of CGST Act, they would have used the word intrastate supply, and when you talk about section 5 of your IGST Act, they have used the term interstate supply. Right. This is nothing but the bird's eye view, three sections that we are going to focus on. Now friends, the first subtopic is the basic provisions, where we will see certain definitions and try to understand the basic provisions of taxable person. So the focus basically will be on the definitions. As this chapter is all about taxable person, friends, let us understand first what is meant by person. Person, what is meant by person? Friends, when you talk about person, as per section 2 clause 84, as per section 2 clause 84, your person is defined, and person is defined to include. Person includes, and person includes what all, friends? Excuse me. We are talking about all the normal things that we already discussed. Person includes individual, your HUF, a firm, a limited liability, partnership, a company, a body corporate, a society under Societies Registration Act 1860, a cooperative society registered under any law relating to cooperative society, a trust, association of persons or body of individuals, whether registered or unregistered, whether incorporated in India or outside India. So if the keywords here is whether or not they are incorporated, whether they are in India or outside India. Then you are talking about government company. The 11th point, you are talking about a government company, a corporation established by or under any law of what? Under any central government, state government or provisional act. Under any state government act or central government act or provisional act, or you are talking about a government company as defined in section 2 clause 45 of Companies Act 2013. Basically friends, point number 11 talks about your government company. Point number 11 talks about your government company. Point number 12 talks about government itself, not the government company, government itself, central government, state government and local authority. Friends, we have already discussed in your levy chapter that even the government is liable to pay GST. Even if government is supplying certain goods or services, even government is liable to pay GST. Yes, 3 activities of government are not at all supply. If you remember, not supply. 3 activities of government are not at all supply. Obviously, no GST levy will be there. They were municipality operations, municipality functions under Article 243W, Panchayat related functions under Article 243G, and when you're talking about grant of alcoholic liquor license, for which you collect license fees or application fees by whatever name you call. These 3 were the government activities which were not at all defined under supply. They were removed from the definition of supply. Rest all the government activities are included within the definition of supply, right? And even if you recollect the definition of the term business had a last point. Out of the 9 points, the last point was all about government. Even when government is doing any work, even if it is acting as a public authority, which means it is doing a statutory function which only government can do, even that is included in the definition of business. So government doing any work is called as supply, except 3. Government doing any work is included in the definition of business. And to make sure that no one tomorrow tells that no, government cannot collect GST, they have also said that government is also included in the definition of person. So your point number 12 is government itself, central government, state government and local authority. Obviously, when you talk about government, you talk about 3-tier structure: central government, state government and local authority. And the last part, as it is always there even in your income tax act, any artificial juridical person not falling within the above. Right friends, if you look at the definition of person, it is very similar that you have in your income tax act. There are certain important points that we have very clearly discussed, right? One of the important point was you are talking about association of persons or body of individuals, whether incorporated or not, whether in India or outside India. Likewise, even when you talk about body corporate incorporated under the laws of a country in India or outside India. So even a body corporate can be there outside India. Even a foreign company is included. And government company is very clearly included in the definition of person. When you see point number 11, any corporation established by or under central, state or provisional act, or it being a government company as defined in section 2 clause 45 of Companies Act 2013. And the 12th point was very important. Government itself is included in the definition of person, which means that when government is providing certain goods or services, government is also liable to pay GST. Levy is very much there except 3 activities of government: panchayat activity, municipality activity and grant of alcoholic liquor license. Any other activity by the government, even government is liable to pay GST. Exemptions are there for government that we are going to discuss, but levy is clearly there, and for that reason they have included government also in the definition of person, right? That's all about your person when you talk about section 2 clause 84 of your CGST Act. Now friends, what is taxable person? Taxable person is defined under section 2 clause 107. Section 2 clause 107 of CGST Act. Taxable person means a person who is registered or a person who is liable to be registered. Either a person who is registered or a person who is liable to be registered under section 22, where you are talking about turnover based registration, or section 24, where you are talking about compulsory registration. Friends, there is a clear cut chart given here to make you understand. If you want to bifurcate person, right, so person can be categorized as taxable person, non-taxable person. Person can be categorized into taxable person, non-taxable person. Taxable person means a person who is a registered person, or a person who is liable for registration, Friends, we are going to discuss this in your registration chapter. Liable for registration is under only 2 sections, section 22 or section 24. Section 22 is taking registration based on your turnover based registration. Section 24 is compulsory registration irrespective of your turnover. Ignoring your turnover, you have to take registration. So section 24 is compulsory registration irrespective of your turnover. So that is meant by taxable person. Either you are a registered person or you are liable for registration under section 22 or 24. Friends, if I were to take this example in a simple way, supposing you are talking about a very small person, say having only 5 lakhs turnover. 5 lakhs turnover. The basic limit for getting registration is 20 lakhs. That we are going to discuss in your registration chapter. Right. So, basic limit for registration is basically 20 lakhs. Obviously, there are other limits also. Basically, it is 20 lakhs. Now, friends, if you have 5 lakhs turnover, you are actually not required for registration. You are not liable for registration, but you have registered yourself. A particular person who is having only 5 lakhs turnover, he is not liable for registration, but he is registered. Is he a taxable person? Yes. Yes, he is a taxable person. So, if I talk about a scenario where I tell a person who is having 5 lakhs turnover, but he is registered, and I tell a person who is having 5 crores turnover, but he is not registered, and I tell another person, there is a person who is having turnover of 15 lakhs and he is not registered. A person who is having only 5 lakhs turnover, he is not liable for registration, but he is registered. Therefore, he is a taxable person. Now, the person who is having 5 crores turnover, he is not registered. But he is liable for registration. Therefore, he is taxable person. Second person is also taxable person. The third person who is having only 15 lakhs turnover and he is not registered. Now, this person is not registered and not liable for registration. Not registered and not liable for registration. Friends, he is non-taxable person. Right. So, you are talking about 3 persons being there. The first person was having only 5 lakhs turnover. He was not liable for registration, but he was registered. For some reason, he got registered. So, he is a taxable person, because taxable person means registered person. Right. Or, second category of taxable person, 5 crores. 5 crores person is not registered. He is a fraud person, not registered. But he is liable for registration because his turnover is more than 20 lakhs. So, he is also a taxable person. When you talk about 15 lakhs, a person whose turnover is up to the threshold limit of 20 lakhs, which is a normal threshold limit. Special threshold limits we will discuss later. Normal threshold limit is 20 lakhs. He is not registered. Plus, he is also not liable for registration because his turnover is within the threshold limit. Now, that person is non-taxable person. So, you have to understand the difference. Now, if you see the definition, person can be categorized as taxable person and non-taxable person. When you talk about taxable person, it means a person who is registered or liable for registration under section 22 or 24. Non-taxable person means a person who is not registered and not liable for registration. Right, friends, here we have seen the definition of your person as per your section 2 clause 84 and your taxable person under section 2 clause 107. Remember always, nature of business of constitution is not at all relevant for levy of GST. Whether you are registered as a sole proprietorship concern or a partnership firm or a body corporate, that is not at all relevant. Also whether you are a profit organization or not-for-profit organization, they are also liable for GST unless exempted. Which means that even if you tell that I am a non-profit entity, even you are liable for GST. We have already discussed that when we have discussed the definition of the term business. Baba Ramdev may tell that his Patanjali company is not for profit organization. Right. That is not at all relevant, but because business even includes the activities done by Baba Ramdev. The first point of business, out of 9 points, the first point of business was doing any trade, commerce, manufacture, etc., whether or not for pecuniary benefit. Your profit earning intention is not at all relevant. Right. That is all about your definition of person and taxable person. Now, friends, we are seeing the definition of supplier and recipient. Now, why it is important? You have to understand that we are talking about which chapter? Person. So, you should know person's definition, and only a taxable person is liable to pay to the GST to the government. So, we have also discussed taxable person definition. Now, normally when you talk about forward charge mechanism, who is liable to pay GST? In forward charge mechanism, supplier is liable to pay GST to the government. And in reverse charge mechanism, recipient is liable to pay GST to the government. In forward charge mechanism, supplier is liable to pay GST to the government. And in reverse charge mechanism, recipient is liable to pay GST to the government. Now you should understand what is meant by supplier. What is meant by supplier in terms of section 2 clause 105 of your CGST Act, and what is meant by recipient in terms of section 2 clause 93 of your CGST Act. The definition of supplier and recipient. The definition of supplier and recipient. Friends, supplier means what? Supplier means a person who is supplying the goods or services. Obviously, it includes his agent. So, we are not discussing it. Includes his agent who is acting on his behalf. So, that is a normal point. Supplier means a person who is supplying the goods or services or both. Goods or services or both. There is a note written that supplier always will include a person, agent who is acting on his behalf. So, that is always that. Normal meaning of supplier is supplier means a person who is supplying goods or services. Friends, what is meant by recipient? Normally, when you talk about recipient, recipient does not mean who is receiving the goods or services. If at all you are talking about where consideration is payable. Where consideration is payable. Right? Where normally when you take the goods or services, consideration is payable. A person who is liable to pay consideration. Not the person who is paying consideration. Friends, a person who is liable to pay the consideration. A person who is liable to pay the consideration. Now, there is another scenario for recipient where there is no consideration payable. Friends, when you talk about where there is no consideration payable, you are only talking about Schedule 1 cases. Because only in Schedule 1 there can be supply without consideration. You have to understand that when you are talking about no considerations payable, it is implied that you are talking only about Schedule 1 cases, because only in Schedule 1 you can talk about supply without consideration. When consideration is not payable, recipient for goods means a person to whom the goods are delivered or made available to, or to whom the possession or use of the goods is given or made available. Which means, if consideration is payable, it is very simple. Both for goods as well as services. Both for goods as well as for services. If consideration is payable, both for goods as well as services, it means a person who is liable to pay consideration. It is both for goods as well as for services. If at all you are talking about consideration is payable, it is both for goods as well as for your services. Recipient means simple. A person who is liable to pay consideration. Contract. A person who is binding by the contract. Who is bound by the contract. If consideration is not payable, friends, first of all you have to understand that when you are talking about consideration not payable, you are basically talking about Schedule 1 4 notified cases, because only in those 4 cases there can be supply without consideration. Please recollect your Schedule 1. In that scenario, if it is goods, it means a person to whom the goods are delivered or made available. It means a person to whom the goods are delivered or made available. And if you are talking about, again, also another point, or to whom the possession or the use of the goods is given or made available. Simple language, to whom the goods are delivered or made available, or to whom the goods are given the possession for usage. Right, simple language, it means that to whom the goods are given over, handed over. To whom the goods are handed over, whether they use the term delivered or made available, or to whom the possession or use of the goods is given or made available. To whom the goods are handed over. And when it is about services where consideration is not payable, it is the person to whom the services are rendered. It is the person to whom the services are rendered. Friends, you have to understand that whenever you are talking about supplier and a recipient, between the supplier and the recipient, there should be a contractual reciprocity, contractual obligation, contractual reciprocity, or contractual obligation, Now, to make this more simple, let us take an understanding where you are talking about going to an academy to attend the classes. You are talking about going to an academy to attend the classes, right? So, supposing you are talking about students who are going to an academy, right? You are going to an academy, say PJ Academy, right? And I am the lecturer, I am the faculty who is handling, say, indirect taxes. I am the faculty who say handling indirect taxes. Now, tell me who is the supplier and who is the recipient. If you go to an academy and you tell that, okay, I want to attend the classes of Vishal Jain, Indirect Taxes, and you have made a payment of the amount. Right? I'll be coming and taking lectures for you. Now, who is the supplier and who is the recipient? Who is the supplier and who is the recipient? Friends, you have to understand that there are two contracts. The first contract is between students and PG Academy. First contract is between students and PG Academy. And the second contract is between PJ Academy and the faculty. For the first contract between students and PJ Academy, PJ Academy is the supplier. PJ Academy is the supplier. And students are the recipient. For the second contract between PJ Academy and the faculty happens to be the supplier. And PJ Academy happens to be the recipient. It is all decided by the contract. Though it is the faculty and the students who will meet on day-to-day basis for the lectures. But there is no contract between the faculty and the students. Now you may tell that for both the contracts, students were the beneficiaries. In both the contracts, you can also conclude that whether it is contract 1 or contract 2, students were the beneficiaries. Students were the beneficiaries. But a normal misconception that is there is beneficiary is equal to recipient. No. Beneficiaries may or may not be the recipient. Beneficiaries may or may not be the recipient. It is all decided by the contract. Now in this case, when students make the fees payment to the academy, academy is the supplier, students is the recipient, contract number 1. And faculty will go there, handle the lectures, and faculty will get the payment from the academy. Now faculty is the supplier and academy is the recipient for the contract number 2. You can take a lot of these examples. Why? When you talk about students, they are the recipient for contract 1 because they are liable to pay consideration to PG Academy. They are not liable to pay consideration to the faculty. And when you talk about contract 2, it is PG Academy who is liable to pay the consideration to the faculty. Faculty cannot go and ask the students for the consideration. Right? The liability to make the payment of consideration is that of faculty, that of academy to the faculty. Right? Let me take another example to make it very, very clear. Supposing in your office, during your internship, there is a soft skill training that is happening. Right? All the office team, your team is asked, right? Your team is asked to attend the faculty meeting. Supposing you are talking about a chartered accountant's office called as say Jain and Jain Chartered Accountants. Jain and Jain Chartered Accountants. Right? So there is a chartered accountancy firm by the name Jain and Jain Chartered Accountancy firm, and that particular firm wants to have a soft skill training for all their team members. So they invite a well-known soft skill trainer. So you are talking about a trainer. You are talking about a soft skill trainer who comes and gives their team soft skill training. So the trainer will come, give the training to whom? Give the training to the team. Give the training to the team. So training will be provided. Now friends, you have the trainer, you have the team, and you have the CFO. Who's the supplier? Supplier is very clearly trainer. Who's the supplier? Very, very clearly trainer. He is the person who is supplying the goods or services, or both. Who's the recipient? Whether the team members who are attending the training, are they recipients, or whether the firm is the recipient. Friends, the contract is only and only between the trainer and the CA firm. So recipient is the firm. That CA firm happens to be the recipient. Recipient means what? Not the person who is receiving the goods or services. Recollect that. Recipient means what? When consideration is payable, recipient means what? Recipient means a person who is liable to pay the consideration. Recipient means a person who is liable to pay consideration. Who is liable to pay the consideration. Right. So recipient is the CA firm. Jain and Jain Chartered Accountant CA firm is the recipient. Now we'll tell them who are the team members. team members, friends, are the beneficiaries. The team members who are attending the training, they are only the beneficiaries. They are only the beneficiaries. How many contracts were there? Here there was only one contract. Here there was only one contract where the trainer was the supplier, a person who supplies the goods or services or both, and the CA firm. The CA firm is the recipient, a person who is liable to pay the consideration. A person who is liable to pay the consideration. Now, what about team members, my friends? Team members are neither the supplier nor the recipient. They are only beneficiaries of the entire transaction. They are neither the supplier nor the recipient. So, that clearly makes you understand the definition of supplier and the definition of recipient in terms of your section 2 clause 105 and section 2 clause 93 of your CGST Act. Right. Now, friends, when you talk about liability to pay GST. Liability to pay GST. We have already discussed this a number of times, but still we'll discuss for the last time and we'll try to understand there are three scenarios. Liability to pay GST. Friends, you have to understand that the first scenario where you're talking about liability to pay GST, the first scenario, you're talking about the supplier, you're talking about the recipient, and obviously you're talking about the government. Obviously, you are talking about the government. Who is liable to pay GST to the government? Friends, normally understand that GST is an indirect taxation. Correct? So, the burden will be obviously shifted. So, supposing supplier is charging say 1 lakh rupees. Supplier is charging say 1 lakh rupees plus GST at 18%. Plus GST at 18%. 1 lakh 18,000 rupees. So, supplier will collect 1 lakh 18,000 rupees and supplier will make the payment of 18,000 GST to the government. Supplier will make the payment of 18,000 GST to the government. Supplier collected the selling price and the GST from the recipient and he is going to pay 18,000 GST to the government. Friends, this scenario is called as your forward charge mechanism. Forward charge mechanism, where the responsibility or the liability to make the payment of GST to the government is that of supplier. Supplier cannot tell that no, recipient did not give me the GST amount, so I am not going to make you the payment. No, whether or not recipient gives that or not, it is supplier who is liable to pay GST to the government. This is by default. This is a general scenario. So in this chapter, you are not going to see anything about FCM, anything more. Right? When I am telling supplier is liable, all the procedural aspects has to be done by the supplier. All the procedural aspects like taking registration, maintaining proper records, making the payment, filing the return, etc., etc. All the procedural aspects will be done by the supplier. So this is called as forward charge mechanism. Nothing more will be discussed about FCM in this chapter because forward charge mechanism is a general scenario. Forward charge mechanism is a general scenario. And if nothing is covered in reverse charge mechanism and eco, it is by default covered by forward charge mechanism. This is forward charge mechanism. That's everything about your forward charge mechanism. Friends, what happens in reverse charge mechanism? In reverse charge mechanism, they tell that supplier, you are talking about recipient and you are talking about government. In reverse charge mechanism, things changes a bit. Obviously, when you are talking about supplier supplying the goods, recipient will make the payment. So, supplier is supplying the goods or services for 1 lakh rupees selling price only. GST will not be collected. Supplier will collect only 1 lakh. Supplier will collect only 1 lakh. Right? If at all you are confused with the arrow mark, this arrow mark was for the goods or services. This arrow mark for the goods or was for goods or services. You can have in this way. Supplier will give you goods or services and recipient will give you consideration. Even in this scenario, it was the same. Supplier will give you goods or services and recipient will give you consideration. Supplier will give you goods or services. Okay, coming back to this reverse charge mechanism. Now friends, what will happen is Supplier will collect only is 1 lakh rupees. Supplier will collect only is 1 lakh rupees, and it is the recipient who has to pay GST to the government. So supposing GST is at 18%, recipient will pay GST directly to the government. Directly GST will be paid by the recipient to the government. See, final cash flow of supplier, recipient and government remains the same. Final cash flow of supplier, recipient and government in both the cases remains the same. Right, supplier in a nutshell will always have 1 lakh balance in his hand. Right, and recipient will always pay 1 lakh plus 18,000 finally, and government will always finally have 18,000. So that cash flow will remain the same for all the three parties. It is only the movement changes. Now friends, it is the recipient. It is the recipient who is liable to pay GST to the government, and that is called as reverse charge mechanism. It is an exception case. It is an exceptional case. It doesn't normally happens. It is an exceptional case. And RCM are of two types: reverse charge mechanism under section 9.3, reverse charge mechanism under section 9.4 of CGST Act. If it is IGST Act, 5.3, 5.4 of IGST Act. Right. So when you talk about reverse charge mechanism, government tells supplier, you collect your amount and go. You don't even collect GST. Recipient directly pay GST to us. Recipient, you directly pay GST to us. Now the liability to pay GST to the government lies with recipient. Is it a general scenario or an exception scenario? It is not a general scenario. It is an exception scenario. Oh, it will happen only if the cases are notified under section 9.3 or 9.4. RCM is either under section 9.3 or 9.4 of CGST Act, read along with section 5.3 or 5.4 of IGST Act. Now all the procedural aspects, like you're talking about your registration, records, payment, return filing, etc., will be taken care by the recipient, will be done by the recipient. So that you have to understand. That is the reverse charge mechanism case that we are going to discuss in this chapter, where you are talking about 9.3 type 1 reverse charge mechanism, 9.4 type 2 reverse charge mechanism. And friends, when you talk about the last scenario, eco. Now what happens in this eco is, supplier is providing notified services. So you are talking about supplier is providing notified services to the recipient through eco. So the supply of goods or services happens through eco. Now what they tell in this scenario, supplier, you don't pay GST to the government, recipient, you don't pay GST to the government, eco, you pay GST to the government. Eco, you pay GST to the government. Obviously eco will collect from the recipient. So now friends, the liability to pay GST to the government is that of eco, is that of a third party. It is neither the supplier nor the recipient, it is that of the third party. It is that of the third party. And when I tell eco has to make the payment, all the procedural aspects, right, starting from your registration or records or payment or return filing, etc., has to be done by the third party eco. Now GST is paid by the third party, neither by the supplier nor by the recipient, because the supply was to eco, it is paid by eco. Is it for all the cases? No. Is it a normal scenario? No. Again, it is an exceptional scenario. Again, it is an exceptional case where you are talking about eco liable to pay GST, and it is covered only if the cases are covered by section 9.5 of CGST Act and IGST Act, section 5.5 of IGST Act. Rather, when we see section 9.5 of CGST Act read along with section 5.5 of IGST Act, you will find only 3 notified services covered here. You will find goods are not at all covered here. When you see that point, you will find goods are not at all covered there. Only 3 notified services are covered there. So that is all about the third scenario when you talk about eco, right? So that is the introduction to FCM. Thoroughly we have seen, nothing more in FCM. RCM 9394 read along with section 5354, CGST Act and CGST Act and IGST Act respectively. Eco, third person making the payment of GST to the government, covered by section 9.5 of CGST Act read along with section 5.5 of IGST Act. Friends, this is what is given in your page number 6, where all these points that we have discussed, this is exactly what is given in this particular page. Friends, what is meant by reverse charge mechanism? Reverse charge mechanism in simple language, if you have seen the flow, you will easily understand. Reverse charge mechanism means recipient is making the payment of GST to the government instead of supplier. Rather, that is the definition. Your RCM, which is defined under section 2 clause 98, your reverse charge, which is defined in section 2 clause 98, because there are two types of RCM. The entire focus is now on RCM type 1 93 section 93, RCM type 2 section 94, and eco section 95, right? Forward charge mechanism is by default case. If nothing is covered in 93, 94 and 95, it means it is covered by forward charge mechanism. If a case is not covered by section 93, 94 or 95, it means that it is covered by forward charge mechanism, and by default supplier has to collect the price plus GST from the recipient and pay GST to the government. That is by default. That is by default. Now friends, when you talk about this reverse charge mechanism, it is defined under section 2 clause 98. A very simple definition. It tells that it means recipient of goods or services is liable to pay GST to the government instead of supplier of goods or services. This, friends, is the definition. All the definitions, right? Around 130 plus definitions we are going to discuss. They are all bad act wordings. Word by word is from a bad act. Rather, most of the discussion that we are doing, though you may not understand, but it is only your bad act wordings that we are using. So you are talking about recipient of goods or services liable to pay GST instead of supplier of goods or services. That is reverse charge definition under section 2 clause 98. And friends, as already discussed, reverse charge are of two types. Section 93 reverse charge, section 93 reverse charge mechanism, type 1 reverse charge mechanism, and when you are talking about section 94 reverse charge mechanism. Reverse charge type 1 section 93, reverse charge type 2 section 94, right? Now there is an exemption from registration. This area, don't worry, this will be discussed in your registration chapter. So the leftover area, you need not worry. Whenever there is something left over, we have always discussed that. I will write a note and on the side, and I will tell that in which chapter we are going to discuss. So this exemption notification 5/2017 CT, where supplier who is having only RCM supplies need not get registration, will be discussed in your registration chapter. So don't worry about this chapter. Now first let us differentiate 93 and 94. Rather, the better way to differentiate is differentiate 93, 94, 95. So rather, even the earlier point will be covered. So now we are trying to differentiate your section 93 RCM, section 93 RCM type 1, section 94 RCM type 2, and section 95 eco. Section 95 eco. In section 93 RCM, only for notified goods and services RCM is applicable. Only for notified goods as well as notified services RCM is applicable. Now, who can be the supplier? Who can be the supplier? Supplier can be any person. Supplier can be any person, any supplier. Recipient can be any person. But what types of goods and services? Notified goods and notified services. Notified goods and notified services. In section 93 RCM, it is notified goods and services that reverse charge mechanism is applicable. Who is the supplier? Supplier can be any person. Who is the recipient? Recipient can be any person. But on which goods and services section 93 RCM is applicable? On notified goods and notified services, section 93 RCM is applicable. On notified goods and notified services, section 93 RCM is applicable. So there will be list of notified goods and notified services. One important point that you have to understand for your exams: notified goods is not there. It is practically there. For your exams, you don't have notified goods taxable under RCM for applicable for your exams. I'll repeat. Section 93 talks about what? Supplier can be any person. Let us again discuss this with the help of a chart. You are talking about section 93 RCM. Section 93 RCM. Supplier can be any supplier. Supplier can be any supplier. Recipient can be any recipient. Recipient can be any recipient. Your supplier can be any supplier, and your recipient can be any recipient. When, say, what is the coverage of 93 we are trying to understand? We are trying to understand the coverage of section 93, which we are calling it as RCM type 1. And the goods and services which can be notified under section 93 will be specifically notified. You are talking only about notified goods and notified services. Notified goods and notified services. And as discussed, notified goods list is not there for your exams. Is it practically there? Yes, but notified goods list is not there for your exam. That is RCM type 1. Now friends, what is RCM type 2? RCM type 2. RCM type 2 is supplier should be unregistered supplier. Supplier should be unregistered supplier. Recipient should be registered plus notified recipient. Recipient should be registered plus notified recipient. And what is the coverage here? Or what are the goods and services can be covered with that can be covered in section 94 RCM type 2? Again, notified goods or notified services. Friends, you will clearly find out the difference now. When you talk about section 94, which is RCM type 2, Now friends, you are talking about which supplier? Supplier should be unregistered supplier. Recipient should be registered plus notified recipient. Not only registered plus notified recipient. And what goods and covered services can be covered in 94? It is only notified goods and services that can be covered in section 94. So the scope of 94 is lesser than the scope of 93. Why? In section 93, your supplier can be any supplier. Your recipient can be any recipient. And the goods and services should be notified. Right, but when you talk about 94, the supplier should be only unregistered supplier. And the recipient should be only registered notified recipient. Registered plus notified recipient. Right. Now if you compare in 93, it was any supplier, any recipient. In 94, it is unregistered supplier, recipient is registered notified recipient. And the coverage was the same. So friends, when you talk about the coverage, it was notified goods or notified services. Section 93 notified goods is not for exams. Is it practically there? Yes, but it is not for your exams. Right. Friends, now we'll tell, okay, then what is there in eco? Friends, when you talk about your eco, there are only three notified services that are covered. And your supplier can be any supplier, recipient can be any recipient, but the supply should be through eco. So if I were to even write this within this particular chart so that you can easily correlate. So 9.5 coverage. Your supplier is any supplier. Your recipient is any recipient. Your supplier is any supplier, your recipient is any recipient. But the supplier is supplying the goods or services through eco. So this supply is not directly, this is happening via eco. Your electronic commerce operator, eco. It is via your eco. And what is covered, friends, is only notified services. Forget about goods. Notified services. Friends, that is the coverage of section 9.5 eco. Friends, who is the supplier here? Supplier is any supplier but supplying through eco. Recipient is any recipient. And when you talk about goods or services, first of all you have to understand that there are no goods here. So when you talk about this, goods is not at all covered. Not at all notified. Forget about your exam. It is not at all notified. It is only supply of notified services through eco. It is only supply of notified services through eco. So this is the difference between the 3 points that we are going to discuss here. 9.3 RCM, any supplier to any recipient but notified goods, notified services. 9.4 RCM, unregistered supplier to notified, registered notified recipient, unregistered supplier to registered notified recipient, and again notified goods and notified services. 9.5 any supplier but through eco, any supplier but through eco, any recipient, and you are talking about notified services. You are talking about notified services. Friends, you have to understand that these are the basic differences between these 3 types of RCM. But before I end this, we have done with this all these 3 cases: 9.3 RCM type 1, 9.4 RCM type 2, and 9.5 eco. When you talk about 9.3 RCM type 1, though I have said supplier can be any supplier, recipient can be any recipient, when you see the notification, when you see the list of notified goods and services, when you see the list of notified goods and services, while notifying the goods and while notifying the services, though goods are not applicable for exam, they at times demand a specified category of supplier. They at times demand a specified category of recipient. They at times demand a specified category of supplier. They at times demand a specified category of recipient. Normally the focus is on specified category of the recipient, specified category of the recipient. Right, we'll understand now. As of now, they tell any recipient. But when you see the notified goods list and services list, that notified services will be along with a particular recipient. So along with that notified goods and services, they attach, at times demand that it cannot be any supplier, it should be only this supplier. It should be only this supplier. And at times they demand that, mostly they demand that it should be only this recipient. So it is very common to see when you talk about section 9.3 RCM type 1, that when they notify the goods or services, they demand only when it is a specified type of recipient, and at times they demand a specified type of supplier. Say the recipient should be only a body corporate or a partnership firm, like that they will specify. So while doing what? While notifying the goods or services, they also specifically demand the notified specified type of recipient and specified type of supplier in many categories. So that you have to understand, right? And similarly, when you talk about your section 9.5 eco, while notifying the services, they demand specified category of supplier, They tell that it cannot be any supplier, supplier should be having only so and so turnover, not above this turnover. So they put some restriction. So this is not done in the section, it is done while notifying the goods or notifying the services in section 9.3 and section 9.5. You got that? So you have to understand that 9.3 tells that it can be any supplier, any recipient, notified goods, notified services. But when you see the notified goods and services, you will find that, oh, it cannot be any supplier, any recipient. They even specify that, oh, he should be only the recipient and he should be only the supplier. So that they tell it indirectly. So this you will understand while discussing the RCM entries and eco entries. In 9.4 no change. 9.4 is very simple. It is unregistered supplier, registered notified recipient, notified goods and notified services, same. 9.5, though they tell that any supplier through eco and recipient is any recipient, when you see the notified services, and it is only for notified services, when you see the notified services, you find that they demand a specified category of supplier. So that you will understand when we see that. So I wanted to tell this so that you don't get any confusion when we are seeing the entry. How can they specify a particular recipient or specify a particular supplier? That they do while notifying the goods or notifying the services under section 9.3 and 9.5. So I will again remove this part so that we can differentiate. This is only when you see the entries. This will come only when you see the entries. As of now, it doesn't make any difference. This will come only when you see the entries. But you have to understand that this will come. Now, if I were to differentiate 9.3, 9.4, 9.5. In 9.3, supplier is any supplier, recipient is any recipient, and the goods and services are notified goods and notified services. In 9.4, supplier is unregistered supplier only, and recipient is registered notified recipient, registered plus notified recipient only, and the goods and services are only notified goods and notified services. In 9.5, supplier is any supplier but through eco. Recipient is any recipient. And what is notified there is only notified services. So this clearly explains the difference between your 9.3 RCM, 9.4 RCM and 9.5 eco, and certain special points which we will see when the notifications are given, will understand them very, very clearly. Friends, now our discussion will be based on this model. If at all I was talking about our discussion 9.3, 9.4, 9.5, right? We'll be discussing our entire discussion in these three parts, right? Your RCM type 1, your RCM type 2 and eco. Your RCM type 1 is for both notified goods and notified services. It is both for your notified goods and notified services, but notified goods is not for exams, not in exams. It is not in applicable for your exams. So only notified services. RCM type 2 is basically only for your real estate sector. It's basically only for your real estate sector. And when you talk about eco, it is for 3 notified services. 3 notified services only. So our discussion will be broken into 3 parts, 9.3, 9.4 and 9.5, where 9.3 though practically it is for notified goods and notified services, will be discussing only notified services, as notified goods list is not applicable for exams. And friends, 9.3 will be discussing along with exemption. So 9.3 will not be discussing here, we will be discussing along exemption. So we will be discussing that in exemption along with RCM. 9.3 is a very important type of RCM, lot of notified services are there. So our discussion on 9.3 will be after this chapter gets over. So we'll be discussing this 9.3 along with your RCM entries. We'll discuss all the entries of your RCM entries in 9.3, but we'll be discussing this in consolidation with your exemption. So we'll discuss exemption read along with RCM, so that will make your exemption entries also clear, RCM also clear. So that will be discussing after this chapter gets over. Right, there will be a chapter called as chapter 5a, where we'll be discussing the exemptions on services and RCM on services together. Right, so now our discussion will be only and only for, our discussion will be restricted only and only to 9.4 RCM, which is for real estate sector, and 9.5 eco, which is for 3 notified services. Right, the first type 9.3 RCM, which is for your exam, which is applicable only for notified services. Notified goods list is also there, not for your exams. For your exams, only notified services. We will be discussing that along with exemption entries. We will club that exemption entries and RCM, so that you will understand that entries in a more better manner with more practical examples, so that you are very clear when you are writing your exam questions. Right, we will be consolidating that along with your exemption entries. Now our focus will be on your 9.4 RCM, which is only about your real estate sector. So we'll discuss everything about your real estate sector, right from your exemption to 9.3 RCM to 9.4 RCM to time of supply. Rather, real estate sector, we'll discuss exemption. There are 2 entries of RCM of real estate sector in 9.3. We'll be discussing that. Then our focus will be on the main thing 9.4, and also we'll be discussing time of supply. We'll be discussing 4 parts together. And finally, we'll be discussing a small subtopic, which is all about your eco 3 notified sources. The important point that I wanted to tell is the discussion on section 9.3 RCM. The discussion on section 9.3 RCM with respect to your notified services, as notified goods is not for your exam, will be discussed separately in a chapter where we are going to club your exemption entries and RCM entries. So now our focus will be on, our entire focus will be on only on 9.4 RCM type 2, which is all about your real estate sector, and 9.5 eco, which contains only 3 notified services.